What up, Hyperchange? Hear me? We are talking about Lucid Motors here. The IPO SPAC that has got everyone talking about. Lucid down 40% as I'm making this episode. We are going to share my screen here so y'all can check this out. I wanted to go live at the close. We have 3 minutes left in the market just to watch what happens here. This is sort of history in the making. Lucid, I kind of want to give a little bit of background for those who don't know about Lucid, because this is a really interesting situation. So, you know, the SPAC boom, we all know what's happening with the SPAC boom, which is companies are using these shell corporations, reverse merging with them. It's sort of like a hack on the IPO process. And so a much cheaper, faster way to IPO. It's caused this massive IPO boom. So as a part of that, and especially the interest in electric vehicles and Tesla, we've seen so many companies try and take advantage of this. So many startups like Lucid, who just 2 years ago were struggling to find any investors or even keep the lights on, and are now at a value of $60 billion, despite the fact they haven't even delivered a single car. So this is a pretty unprecedented time. This is called Churchill Capital Corp 4. They haven't even changed the name to Lucid, but this is the company that on yesterday actually was officially announced that Lucid would be partnering with them. So I want to break down what happened here, because originally we started with the stock here at $10. So that's what the company was trading at, the shell stock. And then as rumors started coming out from Reuters and Bloomberg that a deal was going to happen, the stock started rising rapidly. And so that's what we saw here. And investors were speculating. And this is what I kind of wanted to give people a little bit note of caution about, because people were speculating on this stock without knowing the valuation. Like, are you really going to buy a stock without knowing how many shares are outstanding? Like, I think this is such an important piece of understanding stocks in the market. Is when you buy a stock, you're buying into a company. And when you buy a stock, like, the valuation of that company is determined by the price per share times the amount of shares, which sounds super simple. But to everyone investing in Lucid, I would beg them to know, do you know what the outstanding share count is of Lucid? Do you know what valuation you're buying in at? Because the crux of that question is why we had a massive crash. So leading up into all of this hype with, oh my God, Lucid's going to IPO. It's going to be the next Tesla. It's going to be worth 50 billion. Everyone's freaking out. Nobody's doing any homework on the valuation. Nothing officials come out. The stock runs up here to $50. And so now we have this shell company, which is literally nothing, worth billions of dollars for no reason other than people will think it will merge with Lucid. Then the deal gets announced. So now I'll pull up the official deal that got announced here. But the deal gets announced on Monday, and it's a huge letdown because the valuation, they did a huge funding round at $15 per share, and that valuation was $24 billion. So here's the official press release that came out yesterday, and they talk about, you know, we're going to, our vision to redefine luxury, performance, and efficiency in the sustainable electric vehicle market. So we have Lucid here, talks about the details of this deal. It's at $11.75 billion transaction value, but then they're also raising $2.1 billion in cash from CCIV, which is the Shell Corp, and $2.5 billion fully committed PIPE, which is a secondary offering. So they're not only going public here, but they're raising an insane amount of capital. They actually ended up with $4 billion of capital. And this is the largest ever SPAC related PIPE, which is pretty epic. They're saying they already have 2,000 people expanding to expand to 3 billion. So this all looks great. But the important thing to understand here is with an implied pro forma equity value of $24 billion. So Lucid Motors at $15 per share is worth $24 billion. And so that's why when this thing was trading here at 50, everyone's like, wait, if it's 24 billion at 15, when it's at 50 or 65 bucks, this is like a 60 or 70 billion dollar company. That's right. Lucid was trading for 60 or 70 billion dollars yesterday at this announced price. That's why today it crashed. And if you look at the stock today, as we're heading into the close here, it's down 38% to 35 bucks, but 35 is still more than double 15. So we're still trading out a 55 to 60 billion dollar valuation for Lucid right here at 35.21. And so remember what I said, the outstanding share count is the most important thing that matters. So this is Lucid's 70-page investor presentation they put out, which we're going to go through and I'm going to analyze here. But the most important, honestly, none of this matters to me except this number here at the bottom where they talk about the actual mechanics of the deal. I think it's literally one of the last slides here, but the mechanics of the deal here where they say they have 1.6, oh, sorry, I thought I was sharing. They have 1.6 billion shares outstanding. So this is the number to look at. And this is the slide that I would spend a lot of time on if you were a Lucid investor, because this is the mechanics of the deal. How it's actually working is there will be 1.6 billion shares outstanding when this is all said and done. So 1.6 billion times 35, that's how we're getting to that 55 or 60 billion number for the valuation. So I think this is probably one of the most ludicrous valuations I've ever seen. And I think, so Tesla succeeded, and I think everyone's taken it for granted how good of a business this is. And I've said this before on the channel, but it's just, I can't reiterate how crappy of a business building a car from scratch is. It's literally like takes the most billions of dollars of upfront, and then you get this micro incremental return. It's an extremely capital intensive business. That's the reason why Ford, GM, Toyota, all of these automotive companies before Tesla were trading at a fraction of 1 times price sales. They're trading like 0.5 times price sales for like a 100 billion in revenue. They're only trading at a $50 billion market cap because it's such a low margin, crappy business. And so I think that's always important to remember when you're thinking of vehicle companies. But Lucid literally hasn't even delivered a single car, and it's worth 60 billion, which is worth as much as Tesla was, and they were delivering 100,000 cars. So I know we all kind of know how irrational this has gotten, but I think this is truly like gambling, not investing. This is trading, not investing. Nobody's investing in Lucid at this price. And that's why I kind of, the crux of this video is my take on all of this is Lucid actually doesn't sell cars. They sell their own stock. That is the product. When they were running ads for the Super Bowl and for all these football games, it wasn't to sell you their car. No, it was to sell you their stock and their IPO. They just sold 4.5 billion worth of stock. It's going to take them 3 years to sell that many cars, even by their ridiculous optimistic financial projections. To me, this is an entirely, Lucid Motors just 2 years ago was on the cusp of bankruptcy and got $1 billion essentially bailout from the Saudi Arabia private wealth fund. So when you think about, Elon Musk and Tesla, this is a guy who owns 40% of the company, is motivated by a huge stock option package to take it all the way, to innovate. That's who's behind Tesla, this real, Silicon Valley innovation entrepreneur inventor, Elon. But when you think about who's behind Lucid, it's a company that almost went bankrupt, that got kind of a washed up Tesla guy, Peter Rawlinson, to raise money from the Saudis to try and do something. So I don't know. I don't see as much of one of my favorite metrics in investing is like give a shit factor. And I was looking for their SEC filings to figure out what is the salary that Peter Rawlinson makes. How much equity does he have in the company versus how much is he actually getting paid? That'd be something I would look into immediately. But I don't know. So I think this is really interesting. Now let's go through the investor deck, because actually one thing that I thought was super interesting about Lucid is they market themselves as not competing with Tesla. So they think that, and this is, I couldn't find their SEC filings, this is the most information we have, but they say, this is actually the biggest red flag for me for Lucid, is their CEO's like, we have amazing technology. We just humbly, with our best in the world technology that is second to none, which is crushing everybody, just really humbly need to execute. And it's like, yeah. And they say they're the first electric vehicle luxury company to come to market, first luxury electric vehicle to come to market. And so this is sort of a big red flag when I think of companies that they say they're competing with Tesla, or they're trying to basically copy Tesla in the Model S, but then when they talk about their competition, they don't include Tesla, and they say, Tesla doesn't do luxury, we're doing luxury, we're competing with Mercedes-Benz and BMW, that's who we're focusing on. But if you think about those companies, they're getting less relevant. So I just think there's an interesting disconnect from Lucid's like paper business. It's like an MBA business model. Like it was designed by an MBA, but when it hits the real world, I don't think this will succeed. So like for instance, Lucid brags about a $650 million reservation backlog. So first of all, if you buy in at 60 billion, you're paying about 100 times the current reservation backlog of a super low margin revenue, which is ridiculous. And even the reservations, if you back that out, 650 million by 130,000 units, that's only 5,000 cars. So despite all of this hype, despite sending millions and millions on advertising at football games and to do all of this and to get on CNBC and hire a press team, they literally only generated 5,000 reservations. So the interest on the actual product side has been tepid. I would say this is an extremely niche luxury product. And then when you actually, add up the specs to the Tesla Model S, I think we're looking at specs that are, for the price, even worse. And so I don't know. I think this is a really interesting moment in financial history here. I'm extremely skeptical on this IPO. I think it's going to totally flop because it's just really hard to build cars, and they've done nothing hard. I can't stress how much there's a business behind every stock, and the valuation matters. So they have 4.5 billion in cash, but they're projected to burn 8.5 billion in the next 24 months before they get close to profitability. So this is a company that is going to need to continually dilute shareholders. Their main product is a premium electric sedan, which is more expensive with worse specs than Tesla and the Elon Musk. So as much as this company gets a halo effect for being in the same boat as Tesla, for being this disruptive electric vehicle niche, I'm like, wait, this is actually a huge weakness for them because they're going up against the smartest, most innovative company in the world that just refreshed their flagship electric sedan, the Plaid Model S. The Plaid Model S is faster, it has longer range, and it drives itself. So here's another big thing that I think is really interesting about Lucid is their entire focus is a lot on luxury. So it's a luxury car. It almost feels like something that you want to get driven in. This is a car that is like, so you want to be chauffeured in. So that's their envision of luxury. But what they're sort of forgetting here is that these cars will have to drive themselves in the future, especially by the time that Lucid actually gets these on the road. And when you think about something that's like, okay, well, why is Tesla breaking the mold of every car company? Why is Tesla able to hit a valuation of 10 or 12x sales? It's because they have a software component to their business. And they have this whole, self-driving future, 1 million cars with two-way software that they've been developing with their FSD chip, with their neural net team. Nowhere in Lucid's presentation do they talk about their autonomy strategy. Do they give us any details about it? Do they really have a concrete autonomy strategy? No. And so Elon Musk says buying a car that's not upgradable for autonomy is like going to be like buying a horse. Like this is just so if you actually think about if you were a customer and you're going to pay as much as a Plaid Model S for worse specs without an autopilot system. And then the other thing is like, I don't know, I'm kind of trying to read in between the lines and just pick up the breadcrumbs, because the other thing I saw the CEO talk about on CNBC is like, they're like, okay, what about charging? He's like, charging is going to be way better than the Tesla 2. We can do 300 miles of range in 20 minutes. And that's on the flagship, groundbreaking, super luxurious thing that has no problems, Electrify America. It's like, dude, have you heard about any of these Electrify America stories? That network is garbage and it's super slow, but that's what they're relying on for charging as a super luxury experience. Like they say Tesla's not a luxury brand, but when I go plug in my Tesla, it's at this super bougie supercharger. And with them, I'm going to be plugging in this crappy Electrify America station that's not even going to work. Like you tell me what's luxury. You know what I mean? And so I think it's so ironic that in the same way that they say they're not competing with Tesla, like here they say Tesla's not luxury, it's innovative. We compete with these people. We don't compete with Tesla, yet their entire presentation, once you go back and like talk about the specs and who we're competing against, is all about Tesla. Like it's all about how we're better than Tesla. It's all about how we can beat Tesla. But then technically they're not competing. Anyway, it's just confusing. But on the flip side, I do kind of want to spend some time on this side because you see their miles per kilowatt hour battery efficiency is extremely impressive. And this is one thing that Lucid has sort of impressed me on, is a 500 plus mile range car. They say that it has the capability for rapid charging. They say it's a lot more efficient here in terms of battery. So it's like, well, if you can deliver on these specs, this is going to be a really impressive car. This is going to be some awesome technology if you can hit 500 miles. Like that's actually, Tesla doesn't have a car I can buy for 500 miles right now. If you do, I will be impressed. I think they're not going to make much money on it, but I do think that's very impressive. But the flip side of that is talk is cheap. How much money is it to build one prototype and you're worth 60 billion, but do we actually have to deliver thousands of these, tens of thousands, actually hundreds of thousands to get into our valuation and make customers happy? That's just totally different. And if there's one thing we learned from, like, I don't know how many of these Lucid bulls were around in the Tesla days, but if you remember when we were in 2017, 2018, it was just one quarter after the next of disappointment, of letdowns, of things not working during the production ramp. And every single EV company that I've followed has that exact same pattern of over-promising, under-delivering on the production ramp, massive hiccups, massive more capital that is required. And I think Lucid's going to be no different here. And so that's why I think I take all of this with such a grain of salt, is because, you're watching all these CNBC and they're like, every EV company's at a ridiculous valuation. Tesla's fundamentals can't justify its valuation. Well, it's like, actually they can. They're super profitable. They deliver more and more cars every year. They have customers that are super happy. They actually do have an autopilot system that you can use. Like, this is all real. Right now, Lucid is just, it's just a dream. It's just literally a PowerPoint that I'm showing you. That's all Lucid is. And okay, they have a factory where they piece together some metal and they have one prototype car, but they've raised billions of dollars. Like I give, half the people in the chat $1 billion and they can hire some ex-Tesla guy for 10 or 20 million to build them one, prototype car, so that's, I really am not sold on this. I'm like, even with Tesla, I was such a skeptic before I became a believer. And I think that's how you have to approach all of this. And so, yeah, I don't know. I think it's, anyway, let's keep going through the PowerPoint here, because there's a lot of interesting stuff. And, they talk about their long range performance and long range, which if they can actually hit these numbers will be very impressive. But, I think it's interesting how they frame themselves as such a competitor to Mercedes, who is actually shrinking and going out of business. But these are their cars. This is the lineup. I think it's awesome. It has potential. It looks like a bougie, you know, if Apple was going to make an EV, I think it would look like Lucid. I still think Apple could buy Lucid, and that would be a great way for them to fail together at trying to compete with Tesla. But this is Lucid Air, and you know, they're pitching you this platform play. So that's when you think about Lucid in the bull case here, you're trying to understand, you know, is this just a company selling 20 or 50,000 electric sedans a year? That's only a couple billion in revenue. That's not going to justify a $60 billion valuation. You're already betting on this 2023 project to be a success that doesn't even exist. And then you're even betting that this other potentially future vehicles that we don't even know what they look like are also going to be a success. That's how much is priced in to this company right here. But I do think it's important to note that they're really pitching this as a platform play. And actually do want to give Lucid some cred, because they were a battery company called Aptiva, I believe, before this, developing electric Formula E cars, which did put up some impressive stuff. So I do think there's a chance that they do have a lot of good technology under the hood at Lucid. I just don't know. Until I get into a car and watch it drive and actually test the product myself, you know, it's just hard to know. But anyway, that's what they're pitching, that this is a real skateboard play. This is that Project Gravity sort of SUV Model X competitor. Redefines luxury for SUV. I don't know. But is it like, what about the self-driving? That's what I think. So, okay, you know, they're going to launch more and more vehicles, energy storage systems, technology suppliers. They're going to, eVTOL. Wow. Dude, they're going to be in eVTOL jets. I wish we could have gotten that. Now the 60 billion totally makes sense. Sorry, it's a little bit loud. Be right back. But yeah, so this is the other thing I wanted to show about Tesla or Lucid that I think was the biggest sort of red flag about how they're marketing not their cars, but here's their time to charge thing. So they love to talk about how they are way faster to charge than a Tesla, and this is something I've seen almost every single EV company tout. And then when they actually go to market, it just doesn't actually come to fruition. So 200 miles in 30 minutes, or 20 minutes and 300 miles, does Lucid have a network of chargers? No, they haven't built a single charger. They're just tapping into this Electrify America network, which most of those chargers are not going to have that capability. They're probably going to be broken all the time. It's a VW project. This is so subpar to the Tesla supercharging experience, yet on this PowerPoint, they pitch it as better. So to me, this is where the Lucid story starts to fall apart. It's like, I'll believe what you tell me if it's legit, but don't start fudging the numbers, because the second you fudge the numbers that I know are legit, then I can't trust anything you say. And so, and the real reason they did, so I was, railing on them about autonomy, and they do have an autonomy strategy that they discuss. They're like, dude, we have the most sensors of anyone. We have more cameras than Tesla. We have more radar than Tesla. We have more LiDAR than Tesla. And so, yeah, and so they do claim that they have a sensor suite here, but whether it'll actually be able to compete, I don't know. I just think we'll see. This is some more about their self-driving technology. Rich patent portfolio defined for mass production. And so this is where they said they have over 650 million in anticipated sales, which I was like, dude, didn't Nikola have 8 billion in anticipated sales? Even Nikola was able to rack up more pre-orders than this. So I think that's really interesting. And the customer reservations are fully refundable, and 650 million anticipated sales divided by 130,000 is 5,000 cars. So they've sold about 5,000 pre-orders that are fully refundable. I mean, you're pricing in this company to sell hundreds of thousands of cars, and they in a fully refundable deposit can't even sell over 10,000. So I think, my biggest crux to Lucid, before I get into the financials part that I think is really interesting, where they kind of fudge their financial valuation, is just this idea that it's a product designed without a customer. You know what I mean? Elon Musk built the Model S because it was the car he wanted. To me, this is a car designed by MBAs. It's well, people want a better luxury interior than the Tesla. The Tesla's not technically luxury. So if we come out with a technically luxury EV, it's all this sort of spreadsheet ideating without actually thinking about what people want. Do they want to sit in the back seat of their EV that drives super fast and have luxury in the back? No, we like driving our EV because that's the whole point of it. If you're going to race this performance EV, you want to be in the front driving it. Also, it needs to be driving itself. You don't need to be getting chauffeured. And so there's lots of things that when you actually think through the mindset of an EV customer today, you're like, wait, this is going to totally flop. You're going to, if you're a Tesla owner, tell me you're not rattled by the idea that you would have to charge on Electrify America. That terrifies me, you know? And so I think when it actually comes push to shove, do people want this product? We haven't even seen people want this product, you know, to be worth Clubhouse is worth $1 billion. People think that's ridiculous. Clubhouse has 2 million people using it. Insane product market fit. People love this thing. Nobody loves the Lucid. You know, not one person loves the Lucid. And so to me, you got to make someone happy. And so I think this is really, really interesting. Now, let's, okay, this is going to be really funny. Oh yeah, see, this is what they say, Electrify America, way better than the Supercharge network, right? I'll leave it at there. So this is where they talk about the market opportunity. They want to hit 500,000 units by 2030, which at 100 grand a car would be about 50 billion in revenue. So you're buying them at about 1.2 times 2030 revenue expectations, which is pretty interesting. So I don't know. This is their goal, you know, ambitious. They want to get to millions of cars. This is their revenue projections. They think that they're going to hit 2.2 billion in revenue next year, 5.5 billion in revenue in 2023. So I think these are pretty aggressive assumptions. This would be way faster than Tesla's grown, way faster than any sort of electric vehicle car company has grown. But this is what Lucid is expecting that they will do. And this is, I want to spend some time showing you how I think these projections are ridiculous, that they're going to, you know, go from total deliveries to 20,000 to 49,000, growing way faster than Tesla here. And then, oh, here's their profitability. So I think this is an interesting part, the free cash flow component here. They're going to generate about 8 billion. This is actually different than their other free cash flow numbers. You can see, you know, very unprofitable for at least, you know, until 2023 or 2024, very unprofitable in terms of cash flow. And so, you know, investors in this company, I think, you got to understand you're buying an asset that is going to require to continually dilute itself and raise billions of dollars. You're relying on perceived solvency. You're relying on the perception that they're going to show enough progress to keep raising money. Like, this isn't in the bag at all. You know, it's like when I think about if I was running Lucid, I'm like, dude, this would be ridiculous because, you know, I'm going to have to, you know, raise billions then I'm going to have to, if I'm Lucid, I'm already thinking about how I'm going to raise my next billions of dollars. So when you buy Lucid stock, you're buying, you know, knowing, or I hope you know that there's going to be significant dilution ahead, and there has been significant dilution. And so here's the transaction overview. So this is the part that I thought, and why I'm telling you that Lucid sells stock, not cars. This is what I thought was really interesting. And you guys think I'm hating? Like, I love it. So, okay. So Lucid's valuation is based on an acquisition value of 11.75 billion at $10 per share. So this is extremely disingenuous because this assumes the $5 billion that they just diluted isn't in there. So immediately we have a 40 to 50% bump to this number because of the 4 to 5 billion that just were diluted, but they don't include that. And it's not at 10 per share, it's at 35 per share. So the valuation is that right now they're calculating an 11.75 billion valuation, but if you're buying in, you're buying at 60 billion. That is 5 times higher. So all of these numbers on this chart right now should go up 5x. So their entire case that Lucid is attractive based on 2022 EV estimates or revenue estimates, which is first of all bullshit because it's what they decided would be their revenue. It's not like real revenue, it's just their super rosy projections. Even though they've never sold a single car, they're projecting 20,000 sales and 2.2 billion in revenue next year. Let's give them that. But it's not 5.3 times. It's 5x that because the valuation's 5x. So it's actually 25 times 22 EV revenue. So it's actually 25x is actually double Tesla. So if you actually do the logic by their own slides, they are telling you that they are more than 100% overvalued relative to the most expensive company in the EV space, which is Tesla, which I would argue deserves a way higher premium than them. So even by their own math, they are telling you they're drastically overvalued at these prices. Or by their quote, it would be an unattractive entry valuation. Because if attractive is half of Tesla, I assume double Tesla would be unattractive. Then this is even more bullshit. 2023 EV is their 5 billion revenue numbers. This is even a year out of their ridiculous rosy projections. And they're saying if we go a year out, on our ridiculous stuff, we're only at 2.1 times. Well, it's like, first of all, we have to multiply that by 5x because the valuation's wrong. So it's really 10x. So even by your own rosy projections, you're still valued just as much as Tesla. But that's not the even more BS thing. Then they put this chart here, which is Lucid is positioned at a fraction of Tesla's valuation multiple. Tesla's EV to 3-year forward revenue since 2012 versus Lucid's 2.1 times 2023 revenue. That's right. They're not even pulling the 2022 bullshit. They're pulling the 2023 bullshit to make this happen. So so this is a made up number. So they're saying our revenue multiple is cheaper than Tesla's, but you don't have a revenue multiple. It's your fake theoretical revenue multiple that you're not going to hit. So it's like, and this isn't 2.1, it's 10. So this bar that is here should actually be here, 10, which would show that Lucid has been almost orders, like standards of deviations, more ridiculously valued than Tesla's ever been for almost a decade. Tesla never hit the valuation multiple that Lucid did, even when it was growing at the stage that Lucid did. So when you actually look at the financial, like even the MBAs for Lucid, even the business people for Lucid cannot justify the valuation that the stock is trading at right now. They can't even come up with an imaginary spreadsheet to justify 60 billion. They're going to have to come up with it. Next week, I bet Lucid comes out with a VTOL jet they're going to launch in 2035, because that's the only way they can, and they'll put that in their projections so they can justify a higher valuation, because I don't know. Anyway, that's the point of my rant. But when I see this, like just the dumbest MBA finance logic of like, look at our price sales multiple based on sales that we're going to hit in 3 years that we've never even sold a car on, and how that's cheaper than Tesla's drastically inflated multiple now, but we're only using the pricing based on our pre-SPAC deal, which isn't correct. Like, there's like 8 layers of flawed logic here to make you convinced that this is a good deal. So my point is that why did they put all this effort into that? Why did they make 6 slides about how they're better than Tesla, even though they don't compete with Tesla? It's because they're not selling cars, they are selling stock. They're not competing with Tesla selling cars technically, but they are competing with Tesla selling you stock. And so that is my take on Lucid Motors right now, is they were a company that was struggling to raise capital 2 years ago, got caught up in this EV boom. They don't have a product that anybody wants, but they are amazing at getting hype. And the one thing they know how to sell is their stock. And so what I think is going to happen now is, at some point, this euphoria has to fade. At some point, we have to understand that there's a business behind every stock. And right now, you own Lucid Motors, the business. You're just owning an IOU to pay $5 billion more before anything else happens. Is that an asset that you want to own? Is that an asset that rationally should be worth $60 billion? No chance, especially when you're competing with Elon Musk, the smartest guy in the world. So to me, this is just a case study in irrationality of markets. Or is it that interest rates are at zero? Monopoly money's everywhere, hyperinflation's already starting, and the EV revolution is inevitable, and we're just going to put as much capital as possible into these plays and just see which one works. And maybe that will be a high, maybe a couple of these companies beyond Tesla will emerge for sure. But, this video of do I invest in Lucid? Do I think Lucid's dope? Is a totally different video if they're worth 600 million, which is what I think they should be worth. Like, dude, I think Lucid is worth 500 or 600 million. I think that would be maybe a billion or two. They haven't delivered a single car. Then I'd be like, this has potential. This is a lot of upside. They can deliver a couple cars. Then they can hit 10, 20, 30, 40 billion. I can make a lot of money. The risk reward makes a lot of sense. But the risk reward makes no sense if you're already worth 60 billion. We're already pricing in 500,000 cars. We're already pricing in a decade of growth. And the only reason that car companies are justifying these insane valuations is because they're technology companies, is because they have an autonomous vehicle strategy. And so if you don't have that and you're Lucid, the entire theory that you should be lumped in with Tesla is flawed. And so, and we're not even talking about like how they're going to get batteries. Like, look at what Tesla's saying. We can't build, 10 billion more worth of cars because we don't have batteries. Lucid has not talked about once about their battery strategy, how that's happening. Even VW and Toyota are trying to buy batteries from LG, and LG like bails on the order for them. You think they're not going to bail on Lucid? Anyway, so, this is my rant. On Lucid. If you have any questions, let me know. I hope my internet's not bugging out on y'all, and it's doing okay. You might explode, bro. Yeah, no, I think this is really ridiculous. Like, I'm honestly kind of passionate about it because I've seen so many people that I know get hyped about Lucid with just, and if you think I'm emotional about this, like, I would really encourage people to go watch my videos about Nikola and every other SPAC that, and yeah, I'll just let my videos speak for themselves. But, I think almost every single person who bought Lucid stock didn't know what the outstanding share count was. Every single person that bought Lucid stock didn't test the product. Those are two rules that fundamentally break my rule of investing. You know what I mean? It's just like this company, you know, so yeah, you know, I definitely want Lucid to succeed. Because I think the world needs a lot more of these companies. I think they're a lot better positioned than a lot of these other OEMs who have to, you know, disrupt their own gas business. It's way better to start clean. And if you're Lucid, but I don't know, I'm just not convinced. I'm really not convinced. I get my bullshit radar goes off the charts when I listen to the CEO talk, you know, and yeah, I just think they have a lot of hubris, you know, to say that you're not competing with Tesla. I don't know. I kind of want to make this live stream to see what y'all thought too, because I'm just trying to get my pulse on the market of like, I just feel like the GameStop buy anything mentality. People are only buying Lucid because they think someone will pay more. They're not, if you want to buy, okay, this is how I'm going to end this live stream. If you're going to buy a stock, this is the rule that I do whenever I buy a stock or anything. I buy this stock and I assume the market will close for 5 years and I can't trade it and I can't buy or sell it. So am I comfortable paying this price in 5 years? Thanks for the super chat. No. You know, I think nobody's thinking like that. Everyone who bought Lucid was hoping I'm going to sell it in a week when they announced the deal and I'm going to be smarter than everyone else because I read this Reuters article that everyone else read, and then I'm going to be smarter than them and get in first, and they're going to announce this deal with Lucid and the stock's going to go to 50 billion because that's what Nikola did, and then I'm going to sell. So I hate that. That's not investing. That's not funding amazing companies. That's not doing your homework. The SEC filing for Lucid, I can't even find. I don't even think their SEC filing is out yet. So you shouldn't even have the data to buy into Lucid, in my opinion. Like, I don't even have enough. They're not even giving me enough data to do enough research to even consider buying. So I think we've really reached a runaway point where there is nobody cares what the fundamentals are. Nobody cares what the product is actually like. People only care what it looks like on the internet, what they think other people will pay for it, and where the Momo is. And so anyway, it's all FOMO. That's all it is. Anyway, this is my Lucid live stream. I'm extremely skeptical. I want them to succeed. But I just think it's like, I'm almost like, this is like a ripe stand-up routine. If you saw Lucid, because like, we would never compete with Tesla. That's like the first half of their pitch. And then the next half is how they're better than Tesla. And they're like going to do everything better than Tesla by using Electrify America. Like, anyway, Lucid does not sell cars. They sell stock. This is Hyperchange. Let's see how the cards fall. Please let me know what you think in the comments below. Love y'all for tuning in. It's all about the scheme. It's all about having a debate, just trading ideas. I hope I didn't offend any Lucid shareholders, but yo, I'm a skeptic anyway, you know? Anyway, see y'all next time. Peace.